Good afternoon. I'm Celeste Granillo. Today is Sunday, March 25th, 2018. This is part 2, and I wanted to discuss some of the financial issues that are going on. And I mentioned in the last video about Deutsche Bank. Their stock a few years ago, like I said, was in the 60s. On Friday, it closed about $13.72, but on Thursday, it went down to 12, which scared everybody. I woke up and it was like, Deutsche Bank this, Deutsche Bank that, and everybody was running around about it. Their stock plummeted about 5%. That's a big deal. They are one of the major banks on the planet. I've heard they're either 14 to 16 in the standings with all their investments, but on top of what they own, they are sitting on trillions of derivatives. And derivatives are very complicated, but I'm sure in the next couple years you're going to hear about them. Derivatives are basically side bets. It's gambling, really, what banks do, but they've gone too far with it. Okay, every bank pretty much has derivatives, and it's not like, oh, it's a few hundred million. No, they're trillions and trillions of dollars, and Deutsche Bank has trillions of dollars of these. So they came out, their CFO came out and they said, okay, we do have these issues. We have this debt. It's due to a lower dollar and a higher euro. The euro's gone up a little bit in the past few months, and that has impacted their first quarter. So they were short $150 million. They have a bit of issues because, Deutsche Bank, they're based out of Frankfurt, Germany. And of course they use the euro, but 40% of their investments are dollar denominated in US dollars. So if the dollars is going down, then that drags, their investments down with it. And then they had a shortfall also because of just funding and things like that. So they were trying to start another IPO to raise funds, and they had to lower that stock even. They ended up raising over $1 billion on Friday, and I don't know how they do it. They always seem to find money. They always seem to find funding. I don't know if they have Satan's luck or what. They have Hillary Clinton luck. They seem to find money out of nowhere. I don't know how a company could be filled with so much toxic debt and still stand. And that's for most banks, by the way. What makes Deutsche so interesting to me is that they're interconnected with other banks. I know JP Morgan, which is out of here, they have a connection with them. But most banks do, is what's stunning. So if one is in massive debt, you don't think the others are, and that's how you need to see things, pragmatically like that. When there's smoke, there's usually fire, and everything going on in the financial realm, there's a lot of smoke. There's not fire yet, but there's a lot of smoke. So when I say keep your eye on it, please do. It's your money, and you have it in a bank, and it's not protected. Somebody may say, oh, well, there's the FDIC. Well, the FDIC has up to 99 years to return your money should there be a bank failure or a bank run or anything like that. 99 years, you'll never get back that money, And there's only a few $100 billion in the fund. So, and there's like, 17 trillion in deposits in the country. That's just US. So, it's underfunded, and they don't have to give it back to you. So, on top of which, you're no longer a depositor, you're a creditor for the time being. Now, I heard that could change, but in the meantime, you're an unsecured creditor. It's a risk to put your money in a bank, all right? You just put in what you need to. Now, because of the dollar and our purchasing power being chipped away every day, and it's going to even continue even more, there's not much to, take out of the bank because it's just gone. It's gone. And so it's just something to look at. Look at the Dodd-Frank bill. Now, Trump wants to overturn some of that, and I hope that he's successful in doing that because there's it's dangerous. They made these rules in after 2008, but it doesn't protect us. So you have to do your own research. You have to do your own due diligence and realize what you're signing up for. And so the moment you give the bank that money, it's no longer yours technically. So just remember that every time. So if huge banks like Deutsche are having issues, now they're trying to put out the fire, but if they're having issues, you just have to think about that when all the banks are interconnected. They call it interbanking. You know, it's a technical term. On top of that, they announced, their CFO is the one who made these announcements. He also stated that the first quarter comes after the bank has posted 3 consecutive years of losses. That made me uncomfortable. That made me more uncomfortable than anything else that they announced. 3 years of consecutive losses. So just bear that in mind. The Fed also raised rates last week. That wasn't a surprise. Everybody knew that they would. It looks like they're going to raise them 2 more times. So it would be a total of 3 times. I've heard possibly 4. They're also going to raise them. They announced they will raise them in 2019 as well. They're saying it's a strong economy and we can handle it. But when I look at everything, you can't have such low or almost, no interest rates ever. We've had it for over a decade. People pull that option usually for only a few months, but we've had these very low rates for years, and all it's done is destroyed savings. I mean, why would you have a savings account or put money in a savings account? You're losing money by doing that. So just keep your eye on that. On top of which, and I've stated this before, every time they raise rates, even by a tiny little percent, that's billions of dollars that the U.S. government now owes in repaying their debt. So just think about that. We are on the hook for 21 trillion as it is. Now that's before the unfunded liabilities. So that's before Medicare, that's before Social Security, that's before all the mess that the banks have done. Just remember that. That's why I tell you guys these things not to scare you. I tell you so you'll prepare. So do it, and do it now. There's people preparing for hyperinflation, not with what you think. They are buying bullets, they are buying arms to protect themselves in such a scenario. They're buying gasoline and storing it. They're buying toilet paper. Buy it now while it's on sale. I heard somebody say that a few months back. They also announced, by the way, we have a new the Fed chairman. We had Janet Yellen. Thank God she's gone. She is the quantitative easing queen. We have Jerome Powell, and he says that the economy is going well, so it's time to raise these rates, which when he was first chosen by Trump, he came out and said that, it was known that he wants to raise rates. So it's not a total surprise, but he says that the economy is doing all right, and there are no signs that the economy was on the cusp of accelerating inflation. I don't know about that. But like everything, we'll see, right? So just keep your eye on that, but just know your dollar is being destroyed every single day. Just please bear that in mind and prepare. And people are preparing. I'll tell you what, they're also preparing by buying real estate. They're preparing, you got to be careful with that too, but they're also preparing by buying nothing in banking and stocks, that's for sure. And I mean, why would you want Deutsche, or why would you want Citibank? I mean, or Bank of America. I mean, they're doing all right now, but when you have, like I said, just think of investment banks as massive banks. Remember, they were allowed to link up with other banks in 2008. So like they took Goldman Sachs and they linked it with something. Remember Lehman started Bear Stearns started all this, and then Lehman fell. So Goldman Sachs was saved and Merrill Lynch was saved, but like Merrill Lynch linked up with Bank of America, things like that. So these investment banks are allowed to link up with other banks, and now it's huge. So if they are reporting losses, can you imagine how bad it really is? Remember that. I just want you guys to remember these things. Don't be scared. Remember it and plan. So I wouldn't be in banking stocks. It's not investment advice, but banking would be the last thing. And I told you. And I wrote, you know how I gave my opinion on the other two stories, on the last video. On this, I wrote my opinion. I wrote run. I literally did. My opinion, run. Don't buy this stock. When Lehman Brothers was going down in 2008 and Bear Stearns, CNBC, there's a guy named Jim Cramer, and he always does the buy and the sell and all that. And, he said, oh, Bear's great. Buy it. Hold it. We're all buying it. I mean, as Bear was falling, they were saying these things. I would not believe anybody. If anyone told me to buy banking stocks, it's going to be okay. I would run. I wouldn't take their advice. So just be careful with banking. It's not investment advice. Just, you've been warned. Okay. Don't come and say, oh, I bought Deutsche and now it's being torn apart. You're warned. But they're also buying precious metals. And when there's inflation, which I think is coming now, like I told you, the Fed chairman said it's not. And there's other economists saying there's going to be no inflation. But just in case, a lot of people buy gold to deal with inflation. And, inflation is gold's best friend. When there's inflation, gold runs and is definitely in a bull market. Buy silver, copper, other metals out there, but a lot of people seem to do that. That's from what I've heard, because I've read how do I prepare for something like that, and I just keep seeing metals. So like I said, do your own research, but bear that in mind. A quick CalPERS update. I just want to let it be known that CalPERS has 326 billion in assets, but they have 477 billion in liabilities. So when I say that they do not have enough money, that is the proof that you can give out there. I got that from the Sacramento Bee, actually. It's one of the major newspapers in California. Yes, I still read newspapers sometimes. So, like I said, you've been warned. I would be concerned. Also, too, with CalPERS, there's certain cities and municipalities that can't afford to pay their payment to CalPERS. So anybody in these cities that live in these places that can't afford that payment, they cut their benefits. So for instance, Bakersfield, they said that because they had a generous package, I've heard, and they said they can't afford the payment. They're thinking of raising the sales tax in the city. So the taxpayers are always on the hook all the time. Just bear that in mind. It's not confirmed, but that's what they're thinking of doing to raise funds. So for instance, let's say you have Ontario, California. Let's just say for some reason they can't, they're with CalPERS, they can't meet their payment to CalPERS. Well, then the people that live in Ontario or work for Ontario and they have CalPERS, their benefits will be cut. So that's what's going on. That's already happened in a few cities in California. So if you have a pension, beware as well. So that's what's going on right now. Also, too, I mentioned the PetroYuan last week. A lot of people have taken that and said, oh my God, the market's going to crash at the end of March. Now, you never know. It could happen. But what's going on is the world, if you want to buy oil, you have to purchase US dollars. And that's what's given us such the privilege. Also, too, allowed us to accumulate a lot of debt. And now China set up a trading station in Shanghai. And now they started a new scheme to, if you want to buy oil, you use yuan. So that's why they call it the PetroYuan. On top of that, you can trade that into gold. And China is the leading importer of oil. So they said it only makes sense if we change it from the US dollar to yuan. So look out for that, and that starts today. Keep your eye out on the US dollar, keep your eye out on gold. Like I said, unbelievable. Things are changing every day. So keep your eye out on that. Any questions or comments, please leave below. Thank you so much for tuning in. I really appreciate the support out there, and I I love doing the research and I love showing all of this to you guys. So have a wonderful week and we'll see you guys soon.